Okay guys, so in today's video I'm going to talk about why I sold my stake in Ford Motors. Ford Motors is a stock that I've been holding for quite some time. I usually hold this stock in my retirement account because I really like the dividend, but after reading the latest Q4 earnings report, I just felt it was time to part ways for the stock. I don't know if this is a permanent thing for me, but until I finally see some results in the company and mainly the stock price, I'm just not really interested in Ford stock as much as I was earlier, or as I was last year. So let's just quickly go into the quarterly report and look at what happened when they reported. The biggest problem with Ford stock is simply the stock price is just not returning any value to shareholders, and the company continues to lose market share, continues to basically not fulfill the promises that the new CEO has made. And for me, I'm allocating my money elsewhere. So let's just quickly do a recap of the latest quarterly report. So as you can see, basically, Ford is scrambling to change their product mix. Their earnings before interest and taxes declined in 2019, which is a big worry for someone like me, because in this time of economic expansion all over the world, I mean, last year, the stock markets were at a record high, global spending's at a high. For their earnings to go down is just very alarming for me. So let's just take a quick look. And one of the things that I was really shocked about with Ford is how much money they lost in the last quarter. So if you take a look here, free cash flow was down 67%, and the company reported a Q4 net loss of $1.7 billion. So, obviously a lot of that was due to pension and OPEB, a remeasurement loss. I understand that as well, but just with kind of those losses tacked on with the difference between Tesla and a Ford, how Tesla is really innovating, and Ford is basically just playing catch up mode. For me, I'm just allocating my capital elsewhere. So I just want to continue reading on. Ford has always been a stock where people have kind of just invested in it just to get the dividend anyway, because Ford does usually have positive cash flow. So let's just we made great strategic progress past year with the fundamental redesign of Ford that set us up to compete and win in this era of smart vehicles, a smart world, with great product services and long-term value. Financially, the company's 2019 performance was short of original expectations, mostly because our operation execution, which we usually do, wasn't as good enough. We recognize take accountability have made changes fast. So yes, I'm really excited for the upcoming Mustang Mach-E, but I just think there's better opportunities and other stocks right now. So basically, for me, Ford is just a wait and see. I do not own any shares of Ford. I currently liquidated all of my positions, so I want to show you guys the position that I had. It wasn't a big position. I held about 67 shares in my retirement, so I sold them at $8.27 on February 7th, and I just put the money in a few other places that I liked a bit more, that I felt were a bit more consistent with my retirement, because my retirement, that's a long term account for me. So I put them in stuff like Procter and Gamble. I put some more money in Western Union. I just kind of allocated that capital in companies that are just a bit more consistent. So first, let's look at the stock price, and then I'm going to talk a bit more about how poorly Ford's been performing over the last decade. So if you take a look at the stock price here, Ford is down to $8.10, and while the markets in general have been up big over the last 5 to 10 years, Ford has been just losing value. So as you can see here, the stock is down 50% from 5 years ago, and that's just crazy. So in this type of market, in most stocks, I mean, tech stocks, banking stocks, retail stocks, basically you could have bought almost any decent stock and made money over the last couple of years. And Ford is an example of a company that's lost half of its market cap and continues to go down. So one of the rules that I kind of broke when I kept buying Ford shares was that don't catch a falling knife. And for me, even though this could potentially be the bottom of the stock, it just doesn't make much sense for me to continue holding shares now when there's so many better opportunities out there. So I want to show you guys another tool that I use. Guys, I really like using this tool for Morningstar. It's basically trailing returns. So what this tells you is that all you have to do is go to morningstar.com, and then you can just go to any symbol, and there's a tab here that says trailing returns. What this allows you to do is look at the returns, the investment returns of any stock over a short and long term period. So as we can see here, Ford, we can see here annual. Now this is basically this is annually, okay? So let's see here. So over the last, so year to date, Ford is down 11%. Over the last 3 years, Ford has actually lost 7%. And then over the last 5 years, it's lost 6%. And the stock is up about 1%. 1% over the 10-year. So let's think about that for a second, guys. Ford stock is returning 1%. 1% every year over 10 years. Over 15 years, it's 0.12%. So that is just terrible return on investment for shareholders. I mean, if you're better off. I mean, basically owning Ford stock over the last 15 years is basically the same as parking your money in a low interest savings account. And actually, if you look at the difference, if you would put your money in, Morningstar USTR, this is kind of their index that tracks the S&P 500. So if you would put that same investment in Ford and over the last 5 years, you would have returned 11%, which is basically in line with owning an index fund. Over the last 10 years, you would have returned 14% a year, and over the last 15 years, you would have returned 10%. So you would have been better off just buying an index fund, putting your money in any index fund like Vanguard Index Fund, Fidelity Index Fund, and you would have done a lot better than holding Ford stock. And one of the alarming things that I've noticed is that, so when it comes to ownership on Robinhood, Ford is actually the second highest most owned stock on Robinhood. So I've been so patient with Ford. I felt they could turn things around. My first car was Ford, but I'm wondering if that a lot of that stock ownership was kind of an emotional attachment to Ford being my first car that I had when I was in high school. But just looking at the overall numbers, I think it's just when are we going to see results? And that's what investment to me is about. I love to hear turnaround stories and things like that, but results. So, what I thought about is, why would I even own Ford stock when I could just park, my money into Visa? And I told you guys earlier, if you've seen one of my videos, Visa is probably my favorite stock to own. This is something people are going to use Visa cards, whether there's a recession, whether there's an economic boom, no matter what. And me personally, I use my Visa card every day. So it's just the difference of where did I want to put that money? Did I want to invest in something like Ford, or could I invest in something more consistent like Visa? And I just want to show you guys quickly, the difference that it could have been if, you're investing money in something like Ford, and, you could just be putting the money in something like Visa. So for me, a lot of the Ford sale, I know that Ford, has the opportunity to turn around. I know that they're expecting new products and stuff like that, but for me, a lot of it is just opportunity cost. Where can that money be better invested to earn just a more profitable return, without a lot of the risk dealing with Ford, seeing that the stock is down 50% over the last 5 years, seeing that over the last 15 years, the stock is basically returning the same amount as putting your money in a low yield savings account. So, Ford, I'm pretty sure they'll figure it out eventually. I mean, that Mustang E is a big part of it. They're changing their vehicles. They're launching some new hybrids with the F-150. But I just think there's better opportunities out here now. This is 2020 now. So let's take it. So let's look at this. So while Ford was basically flat over the last 10 years, Visa was returning 26% a year. So what would you rather have? Would you rather have a stock that's basically returned like 1% over the last 10 years annually, or 26%? So the opportunity cost, guys. A lot of you guys that have Ford stock, if you're looking for, you're owning the stock for the dividend. That's nice. With Ford, they're not even increasing the dividend. So one of the good strategies that people can use is, if you're investing in dividend stocks, you want to invest in stocks, dividend growth stocks. That means stocks that are increasing the dividend year after year, because what that means is that you're going to increase your yield on cost. So for example, if you put $1,000 in a stock that raises their dividends, like Realty Income, you know, they've been increasing their dividends for decades. Even if you don't buy any more shares, you're going to continue to get a larger dividend income off that smaller cost as the quarters and the years go on. So yeah, let me know what you think, guys. You know, it's kind of sad for me to depart with Ford stock. I've had the stock for it's been for a while. I didn't have a big position in it, but I like the dividend and things like that. But if you guys are looking for a stock that's actually growing with a very safe dividend, try AT&T. I think AT&T is a much let's check out AT&T. I think AT&T is a much more solid stock if you guys are just holding this for the dividend, because I know a lot of you guys have been holding on to Ford like me for that dividend. So I like Visa. I think Visa is an excellent stock where it comes to something that you could replace Ford with and just get like way better returns. But if you guys are just looking for a dividend stock in general, I would say AT&T. And the reason I like AT&T is simply because they don't have the same share price problems that Ford does. The stock is very consistent. It's you know, my dad, he used to call Visa a widow and orphan stock, meaning that this is something that you can kind of trust. It's not going to go up a ton, but it's got that solid dividend yield. I'm going to show you guys real quick the dividend yield. So okay, so I use dividend.com for a lot of my dividend stock research. Highly recommend it. So basically, you're dealing with like a 5.43% dividend yield with AT&T. They pay about $2 a year, and they've been growing the dividend for 35 years. So that, if you guys are just looking for a stock with like a good dividend, I would recommend AT&T over Ford. And if you guys are looking to purchase a stock in the automotive industry, I think Tesla's just a much better buy. I know there's a lot of volatility there, but you know, Elon Musk, he's been for years, both of these guys, Elon Musk and Jim Hackett, both these CEOs for Tesla and Ford, they've made a lot of promises, and so far it's only been Elon Musk that has fulfilled these promises. So for you guys holding Ford stock, you guys are more patient than me. Good luck to you. I don't know what's going to happen with the future. I really want to see this Mustang Mach-E car. I actually thought about buying one myself because I really think it's a pretty cool car. But right now, I need to see results with Ford. The stock has just been so terrible over the last 10 to 20 years. You know, there's better opportunities for a dividend yield. It's just really sad to see a company, because when I had my first car was a 2000 green Ford Escort. Loved that car. I used that car mostly all through high school. I drove, you know, I'm from Washington, D.C. I took that car all over the country. And, you know, it's just really sad to see Ford fall off. They just didn't innovate, basically. You know, they were just playing catch up, assuming that times would stay the same. And the one thing we know that's constant, there's always change. So one of the most important things to do, one of the things I've realized the most when it comes to investing, is you've got to stick with companies that innovate. Probably the biggest example of this was the difference between Blockbuster and Netflix. Blockbuster, I don't know, for you guys out there, some of you millennials out there, you guys are too young. Blockbuster was basically this video rental store. So you would go into Blockbuster and you would like rent a DVD. I want to show you guys a picture of this for you guys that don't remember. Okay, so yeah, here's a picture of Blockbuster. So, you know, when I was growing up in DC, Blockbuster was it on the weekends. You know, you would come home from school and you would head to Blockbuster and rent a movie. And back then they had these VHS tapes, like really thick tapes, that you would rent the tapes, and then you'd take them home and you would watch them. And then after that, you know, they had things like you could rent DVD movie rentals, stuff like that. And Blockbuster was the king. But what happened is that a company called Netflix came along, and they started doing the same thing as well, but they started out doing DVDs through mail. So instead of having to return the DVD back to Blockbuster, you could mail it in through Netflix. And the problem with Blockbuster was if you had to like rush to return the DVD or VHS tape, or they would give you all these fees. So like, let's say I rented this, I rented a movie and then I brought it back a couple days late. I had to pay so much money. So Blockbuster was just like stuck in this old thinking of people that would always just like go to the store to buy something, a movie, and then they would, rush back to return it. And then you know, a company called Netflix came along, and they were just innovating. And when their innovation, it changed everything. So obviously you guys watching this video, you're pretty familiar with Netflix, uh, you know, and that was the difference. Netflix was they were innovators. So that's kind of what the problem with Ford and with me for Ford is. Ford, they're not interested in innovation. They're not interested in changing with the times. They were like forced to after Tesla. The market cap for Tesla ran up so much, and Elon Musk started getting so much attention, and they were humiliated in that video of the F-150 versus the Cybertruck. You guys can check out that video on YouTube. But that's just the problem with Ford. They're just not innovating fast enough. They're fighting change, and they're going to continue to lose market share, and the market cap's going to continue to shrink until they change with the times. So that's also something that I've been trying to do personally. I've been writing about stocks for years, but it's been, I've had to change with the times and start putting more of my content on YouTube, because that's people want to see video. So that's basically it, guys. The problem with me for Ford is they're just not innovating fast enough. So let me know what you guys think about Ford stock. Are you buying? Are you selling it? What are your thoughts here? We're down 50%. I exited the position. I couldn't take it anymore. From the looks of the stock, I mean, it's got some support at $8. It could be, looking at the historical chart, it's probably going to head lower. Why couldn't Ford stock go to $5? I don't see any reason why it won't or couldn't. So we'll see what happens with this, guys. So let me know what you think in the comments. Are you buying Ford stock? Or are you selling it? Do you think this is a buying opportunity, or are you just buying Tesla? Let me know what you guys are thinking, and thanks so much. And also, if you enjoyed this video, please give me a thumbs up and subscribe to this channel. I'm going to be posting more videos on Ford stock and many other stocks that you guys are buying and selling in the future. So that's it for now, guys, and take care.